this year as it tears through to new highs. But Warren Buffett said in his last shareholder letter to steer clear. So is it time to jump on the bandwagon or abandon the golden ship? Joining me now on a Fox Business exclusive, Ed Moy, the former director of the U.S. Mint. And what do you make about those comments from Mr. Buffett, Ed? Do you kind of cringe when you hear him say something like stay away from gold?
Well, there's a lot of interest in gold because of the political and economic uncertainty that's out there, and those macroeconomic factors haven't changed. So I'm still very bullish that gold has some way up yet.
Okay, why do you say that, Ed? Because, again, it's become one of those, you've heard this, it's the fear trade. We all hear that that phrase. But what do you think has been the biggest factor overall for the last, 3 years now that has driven gold to fresh new highs?
Yeah, well, gold prices are just a function of supply and demand, and the supply is relatively limited, and all the mines that are producing aren't adding a whole lot more to that supply, but yet demand is dramatically increasing. Not only are central banks taking a major position in it, but even individual investors in India and China, there's explosive gold growth in owning physical gold in those countries.
All the gold in the world amounts to $9.6 trillion. And again, weighs as much as the Eiffel Tower based on your time at the Mint. I'm kind of curious from your time there, are you surprised at the interest that we've seen in gold? I mean, 70 years ago, my grandmother would have said, I'm going to hold on to my gold bracelet. It's going to keep me safe in case I need it. But we don't really have that type of economic environment in 2012.
Well, whenever there's uncertainty and there's no sure bets, the smart strategy is to diversify. And most diversification plays are paper or electronic, which means people really value gold because gold, especially physical gold, is something that will always retain its value. But even more, gold generally moves separately from the government policies that influence stocks and bonds and other electronic investments.
But what if, Ed, though, we do get a global economic recovery? I mean, we keep hearing we're going to get one. I don't think it's really, materialized yet. But what happens at that point? I mean, wouldn't you tell people that to scale back their gold positions a little bit? Because you're pretty bullish on it.
Yeah, well, so, Cheryl, what you brought is a very good point. If people see a global economic recovery coming tomorrow, I would rethink my position in gold. But here's the question that you need to ask. Is Europe going to come up with a permanent solution to their debt problems? Is there going to be peace in the Middle East that's going to stabilize oil prices? And will Congress and the President put aside their partisan differences to come up with a budget that instead of creating massive deficits will end up creating surpluses and pay down the national debt? I hope all those things come true, but hope is not a good investment strategy. Diversification is.
Okay, protectionist. I understand that part of it. Let me bring in Hank Smith. He's the Chief Investment Officer at Havaford, who has a very different take on gold. You told me at the top of the show, stay away from gold. You don't like it at all.
Well, look, let's just put gold in its proper category. It's not an investment. It is a speculation, as all pure commodities, because there is no inherent rate of return. There's no earnings. There are no dividends. You are totally dependent on the next buyer buying it from you at a higher price in order to make money. That, by definition, is speculative and not an investment, and yet it's being sold as a safe asset, which we would disagree with that.
Ed, respond to that.
Yeah, well, the key here is don't put all your eggs in one basket. And as you diversify, most investments are either paper or electronic, and it just makes sense to have a bit of your portfolio in physical gold.
But what is the breakdown? I mean, is it 5% of my portfolio? Is it 10%, 20%? What is it?
Really good question, Cheryl. And I think it depends on what your investment goals are. If you're like me and nearing retirement, you want to retain as much net worth as you possibly can. If you're younger and able to take more risk, you might go into the speculate on the daily fluctuations. I'm not that smart. I buy gold for the long term. Okay.
Well, Hank, really quick to you. Let me same question. Percentage basis. If you had it in a portfolio, where would you put it? 5%, 3%, what?
Well, I'd put it very low, almost at 0%, again, because I'm looking for investments that give returns like interest or dividends. And how safe is gold if it starts going down in price, and that's the majority of your holdings, and it's giving you no return.
So be careful. All right, well, very interesting perspectives from both of you. Ed Moy, the former U.S. Mint director and current senior executive at Morgan Gold. Thank you very much. And of course, Hank will be back in just a moment.
Yep.
Well, the closing bell's going to ring. We now have 28 minutes to go. I'm getting close to that 20 minutes I was calling for earlier. While many investors run from financials, Raymond James is performing pretty well. Plus, they just made the biggest acquisition in the company's history. We're going to get the inside scoop from the CEO next in a Fox Business exclusive.
If you change your mind, I'm the first in line. Honey, I'm still free. Take a chance on me. If you need me, let me know when I'll be around. If you got no place to go when you're feeling down. If you're all alone.
This program is brought to you by McGladrey Assurance Tax Consulting.
Give me an 8.
No, 8.
9?
How about an easy 2?
Easy 2.
Bag's heavy, Davis. I had to lighten the load. Got too many clubs. Way too many balls.
I'll take the 2.
Really? It's way too much club. Oh, by the way, that's your last ball. So,
A partner who truly understands your business brings all the options. McGladrey, experience the power of being understood.